You're probably thinking about your 2022 taxes, or are you? Well, the 2023 tax season is already upon us, and with a new tax year comes new rules. Let's discuss how those new rules may affect you and your portfolio right now on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Here with us today is my guest, Brad Dillon, the author of the 2023 Tax Planning Guide from UBS. He's also a senior wealth strategist from UBS's Advanced Planning Group. Brad, great to see you. Thanks for joining us today. Always good to have you at tax season.
Yeah, glad to be here. Glad to be back.
And I know you've been on with me before many times in the past to talk about the guide itself or other tax issues. I wanted to ask you, though, when you're looking, and now you're just finished writing or, in the process of releasing the 2023 guide, when you looked at it compared to 2022, what were some of the big surprises that you saw versus last year?
It's such a great question, because when I was here last year doing this, then you asked me the same question about a surprise. There weren't many surprises.
That's right.
Was the surprise, because 2021 we had all the specter of tax legislation that never came to pass. But this year there is a big surprise, which is the dirty word of inflation. It actually had a very positive effect on overall tax rates, on real tax rates for almost everyone. And a couple of examples of how that might come out. Or just not even examples of, but when you think about inflation, how it's had a really deleterious effect on mortgage rates or the price of milk or whatever it may be, the equity markets.
Look at the price of eggs in the grocery store. We can all feel it and see it for sure.
Baking is no longer 2020. It's expensive to do that, right?
That's right. You're better off going out to eat at restaurants.
Exactly. But it had that deleterious effect. But unlike on those things, for tax rates, it has a very positive effect, because a lot of the tax code itself, the Internal Revenue Code, is tied to inflation. They have inflation adjustments. As inflation rises, that certain tax rates and adjustments are made to the tax code, which have a really positive effect on overall tax rates. So that's the big surprise. Inflation has a very nice effect on our overall tax rates.
I bet that comes as a surprise to a lot of folks watching this who are clearly not invested in tax law as much as you are. Clearly CPI, which is the Consumer Price Index for those who may not know, it's not just for reading inflation. It actually affects what we're going to talk about right now,
Exactly.
which is some of the changes that happen because of the rise in inflation. So we're talking about standard deductions. We're talking about gift exclusions. Well, that's later for estate planning, but tax brackets. Give us some of the examples there.
Yeah, there are a couple of really great examples. The first being what we've been talking about already, which is really about tax rates, overall effective tax rates. And that's what we're talking about. We're talking about how much tax that someone actually pays, the overall effective rate. And that is actually going to go down, as I mentioned here. And that's because for a married couple, for example, they reach a highest rate of marginal income tax at 37%. Those brackets are tied to inflation. And that bracket now, the highest rate, hits at about $694,000 in 2023. Last year, it was $648,000. That's almost a $50,000 difference. So what that effectively means is that $50,000 of income this year will be taxed at a lower rate than it would have been taxed last year. Again, bringing down the overall effective tax rates of, in this example, a married couple who files jointly. Another great example, which you already mentioned, is the gift and estate tax exemption amount. That's the amount you can give away during your life, gift and estate tax free. If you don't use it during life, you get it as a credit against your estate tax liability at death. That amount stands at an all-time historic high this year of $12.92 million. That's up almost $900,000 from last year. So that's $900,000 of additional gifts that an individual can make this year, not being subject to tax, than they could have made last year. And that's double for a married couple. And the guide goes on, points out many examples. We're talking about contributions to retirement accounts, Social Security benefits, lots of examples where inflation has had that nice tailwind effect for many of our clients throughout.
Yeah, I mean, it's incredible because, and what we're getting at here is when you look at going from 12.06 million to 12.92 for estate planning, you can really see how inflation has truly affected how the IRS believes that we should be weighting that towards estate planning and what we are taxed on at those levels. I mean, it's a significant change.
Very significant. And the IRS and Treasury got together after the peak of inflation last summer, around July, August. That's when they really get together and start calculating what are the inflation adjustments going to be. So those actually happened at a very good time for taxpayers, because it happened right after the peak. That's when they were figuring out when we're going to calculate these inflation adjustments for the code. If they were doing it now, the inflation adjustment would probably be lower than it was. So it was good news for all of us.
Right, they hit it when it was around 9%, which was the peak from 2020. 2022.
Exactly.
Now it's about 6.5%
Exactly.
on inflation annually. That's incredible. And I understand also there's, Social Security has been adjusted, veterans benefits have adjusted, standard deductions have been adjusted. So we can, I never thought I would say this, but thank you, inflation.
Right.
Even though I'm paying double or triple the price of eggs, maybe I'll see some benefits in my taxes this year.
Exactly. Well, I hope so. And as inflation, if inflation sticks around, we'll see it again next year and for the years, because these inflation adjustments are really built into the Internal Revenue Code. Congress doesn't have to act. It's just what is the CPI doing when Treasury and IRS get together to determine how to calculate those adjustments. So it is good news. And yes, you're right. Thanks, inflation. First time we'll ever say
so
that.
Potentially, just a follow-up question for you, Brad. Considering where we saw inflation last year, if it continues in a downward direction and CPI is closer to, say, 3% by December, will that potentially affect, again, the tax laws for 2024?
Yes, exactly. Okay. Yep. So again, they get together probably in October-ish each year to figure out what's the CPI been doing and how we're going to adjust those rates going for the following tax year. So whatever the CPI has been doing over these few months, and especially over the summer, is going to be critical determining what 2024 is going to look like. Hopefully I will be here in this chair next year having the same conversation about what the surprise inflation has been.
It's acrylic, but I'm pretending it's wood, so I'm knocking there for you, Brad. and especially for those people out there who maybe didn't or won't be getting a raise this year, when they're paying double and triple in the stores for groceries, for example. This is a good thing.
Yes.
Yeah.
Even though when you're filing on April 18th of this year, you might not feel like it's a good thing.
Right.
But you don't realize if you were filing in an alternate universe where we didn't have the inflation adjustments, it is a good thing. I promise.
Right. That's right. And there's an opportunity. Here we go. This is what we always end with, right? You have to make sure you're talking to your financial advisor, because the tax savings you might be getting for 2023's tax year, you should be thinking about, how do I then turn that around and put that into my portfolio as in my investments?
Absolutely.
Right.
Absolutely. And talk to your advisor also about retirement benefit planning, whether a Roth conversion makes sense, a backdoor Roth conversions. As tax rates or real tax rates decline, those things might make more sense, particularly in a down market. Those things might make a lot more sense. So it's a good time for sure just to be having this conversation with your advisors.
Terrific. And I'll also add, just as one of those disclaimers that we do do not provide tax advice at UBS. Your advisor can't do that, but obviously you want to connect with your accountant or your CPA just to make sure that all the decisions you're making are right for your time horizon. And then, of course, then you talk to your advisor about your portfolio. Brad, it's always a pleasure. Thank you. Thank you for breaking it down, because a lot of times people hear tax law and they go wonky and their eyes go buggy. But thanks for breaking it down. I think it was a really clear, concise discussion. Plus, the tax planning guide for 2023 is out. Check it out.
Check it out. Go ask your advisor. It might be up on the ubs.com page, or reach out to me if you need, or anyone on the advanced planning team. We can send you a copy of it.
Great.
Right.
Brad, thank you very much.
Thanks,
and there's lots of information besides everything that Brad was talking about from the advanced planning team, including the guide itself, by going to our website at ubs.com/views. Lots of content from my team as well up there on our videos and podcasts. Plus, you can check everything out on social media: LinkedIn, Instagram, Twitter, Facebook, you name it. We're everywhere. So follow UBS there and make sure to talk to your financial advisor. Until next time, I'm Anthony Pastore. Have a great day. Get your taxes done, everybody. And remember to keep your eyes on what's trending. We'll see you soon.